Welcome to TheoTrade. This is Don Kaufman. June 23rd, 2023. Minutes to go to the cash close here on this Friday afternoon. Market unwind from rally to recession. Obviously, we're going to be discussing here in this weekend's update a bit of sell-side activity that has transpired through this shortened holiday week. But with that sell-side activity, is there really much to it? For that, look, we're going to jump directly into it here on this weekend's update, taking a look at the SPX because it is, well, rather pivotal right here, right now. For those of you that are familiar with SPX and why we look at it, it's termed expected move. The expected move is exactly how the option marketplace handicaps risk. And this week, we were looking for a move of plus or minus approximately $50, right? I'm just rounding it to basically $50. We are ever so slightly outside the edge of the expected move. But again, I come up with a title here, Market Unwind from Rally to Recession. And then I'm going to flip around and tell you, look, people, right now, what do you really have? It's about a 60-point move. From where we started this week in the SPX, we're down just about 60 handles. Clearly, it's not over. There's 30 minutes left inside of the trading session. It's not over. We can hit the accelerator and just go for it to the downside. But nevertheless, to put into perspective, it's not that far, not that fast. It's been 4 trading sessions, but yeah, we've actually reversed a little bit in markets. But with that, and we're going to talk about some gamma squeezes because last week we were looking at, this incredible squeeze to the upside. Well, we've actually seen signs, specifically today, of a squeeze actually coming to the downside. And we're not talking about short squeeze. Short squeeze is predominantly to the upside, obviously, right? We're talking about a gamma squeeze to the downside. And one of the first products I'd like to point out is inside of stuff like Tesla. Look at the open inside of Tesla. People. Okay, well, first of all, people do not make moves like that. That is, evidence of squeeze, if you will, to the downside. And we looked at order flow, and order flow was actually completely shifted and like hitting the accelerator to the downside. It reversed. Tesla, held it together. Interestingly enough, we saw the exact same action at the exact same moment inside of Nvidia. Right? So there's definitely some negative gamma squeeze going on over here. And that's what I term the other side of the gamma squeeze. Now, I'm not going to go into any depth on that. What I want you to understand, the big, takeaway there is inside of, tech, okay? Ultimately, that gamma squeeze does not, it's by no stretch of the imagination a bullish, okay, connotation to the term gamma squeeze, because the exact same gamma squeeze that can bring you higher can flip over. And well, we saw some evidence again of that, but the marketplace unequivocally did not just go for it today to the downside. As I said, there's still a lot of time left on the clock, but when you're looking, for instance, at a 1% down move inside of the Nasdaq, let's not get all hopped up about absolutely nothing, because that's what you're seeing over here. So it's absolutely nothing. So it's the other side, of course. The gamma squeeze can actually take you a bit lower. The next thing I think that's fairly critical to mention in discussing a market unwind, right? Because look, you just here in the Nasdaq, okay, it's been a spectacular rally, and it has been a spectacular rally. Okay, are there signs of an unwind? Outside of the fact that you see a couple of red candles in your screen, you're just not seeing volatility. Like vol has got to get rambunctious. We're seeing the exact opposite. Volatility is, couldn't be more chill. You're down the VIX and the 12 handle today, right? Volatility futures, they're nowhere to be found. Take a look at the VVIX, the volatility index, even the VVIX. It was ramped up a little bit earlier in this week and actually faded a little bit. It's interesting as the market's selling off. VVIX goes, it's okay. It's all going to be okay. And the marketplace right now has even seen skew. Now that skew, okay, in the SPX drop precipitously. That's actually a little bit scary. That is not per se a positive thing on the screen over there. But the point of me going through this is to display to you that, look, there has not been, the big punch, if you will, lower in this market. And there's absolutely, unequivocally, no confirmation of a huge market unwind, which is exactly going to be my next point. Because are we really even selling off right now? Okay. Or are we selling off? So if we take a look over at the financials, one of the first things I like to point out inside of financials is that on a year-to-date basis, and I point this out all the time, the financials are actually down on the year. If we look at auto expected moves, okay, the financials, they played a big role inside of the rally as well, but they're way outside the lower edge of the expected move this week. Okay. Financials, I say they're taking a hit, but they haven't really done very much. Okay, maybe, yeah, they rallied the last couple of weeks, but they haven't done very much. Then we bring up the energy sector. The energy sector, all right, this is actually fairly critical because the energy sector is down 8.5% on a year-to-date basis. And it's very close. The energy sector is very, very close to punching through lows. Now, this is going to come back up in just a moment because I'm talking about a market unwind from rally to recession. And where's the recession side of it? Do you see a recession in here? Interestingly enough, some of the commodity products, which I'm going to discuss in a moment, some of the commodity products, absolutely. Like there is, if you will, recession, a hint of recession in the air. But before I get there, again, are we really selling off? Not in tech. I mean, take a look for a moment with me. So I brought up the other two big sectors. I brought up, the financials, which, all right, they saw some sell side activity. I brought up the energy sector. And in the energy sector, okay, it too, this has got a little bit of a punch in it. I mean, it's ripped through the lower edge of the expected move. Now, you guys will note that, and I get emails all the time about this. People are like, how come you only bring up tech, energy, and then, of course, financials? Well, let me give you a little detail in there. Because that's all that matters. There's nothing else in here that's like, oh, you're going to bring up Walmart, like retail? Okay. It doesn't matter that retail's rallied a little bit. In fact, we can bring up like XRT. Let's go for it. But in terms of market, okay, cap, this is not going to be a driver of markets. Bring up materials, bring up this sector, bring up that sector. No, I will not, because they're just not going to be that driving force that you're going to need. Now, sure, looking at like the retail sector can be insightful. Looking at the home builders is insightful because it's absolutely awe-inspiring. Okay, how are the home builders doing this? I'll tell you how they're doing this. Up 25% because no one expected it. This has nothing to do with fundamentals and technicals. Okay, this is a sector that just got pummeled as rates started to come up and has recovered quite readily so. Anyway, the point being over here is, are we really selling off? And for that, as I was saying, go look at tech. So the sectors that matter, of course, are the financials, the energy sector. Go look at tech. Does that really look, other than like, okay, it reversed a little bit. This is Microsoft, and yeah, it reversed a little bit. Yeah, it's not really seeing some sell side activity. You want to see some sell side activity, okay? You look back. Let's bring up a little bit of a broader chart over here. You look back over here. People, that's some sell side activity. Right now, like Microsoft hasn't even really skinned its knee. Okay, bring up Apple. Oh, I'm sorry. Did it hit its all-time high today? Yeah. So that hasn't really sold off. Okay, bring up Amazon. Where's Amazon right now? It's phenomenal. Okay, now is it an all-time high? No, again. But if you wanted to see some real selling, that is not it. I mean, Amazon's still in the bid right now. Bring up Google. Okay, is there sell-side activity here? Absolutely not. Meta. Oh, let me see. It's actually higher today. Does that look like sell-side activity? That looks like one of the most incredible recoveries. By the way, I'm short in Meta. I'm short in Apple, and I'm short in Microsoft, and I am short in Nvidia. Bringing up Tesla. I'm not short in Tesla. Okay, Tesla. All right, it stalled out a little bit, but the point that I'm trying to make over here, not one, okay, of the key tech stocks is really displaying like a horrendous pattern. I know somebody's like, the MACD has rolled over. This has happened. Yeah, I've seen this movie before, but nothing has actually what I would term like really punched this market right in the gut. And volatility confirms that. Volatility would be raging. Okay, basically you've seen a 60 handle sell-off inside of the S&Ps, and I know a lot of people are claiming victory over there. I'm not claiming victory at all. I mean, it actually turned a couple of my positions around quite nicely. I had some positions I was getting rocked on, but it's turned them around quite nicely. Just 60-point sell-off over here, but volatility is not confirming any sell-side activity, nor are any of the major tech stocks. And you can't be short-sighted, and you have to actually look and say like, hey, what got us here? Oh, it was tech. Okay, what it got us here? I guess AI insanity of Nvidia, which is literally up like almost 200% on a year-to-date basis. So that's what brought us there. Okay, and these are the stocks that are eventually going to have to bring us to other places. That's when you're going to know that the real unwind is coming here, and it's so critical because again, people are getting all hopped up. I also want to show you, if you're asking the question again, we're really selling off. Not until tech really starts to take a hit, and you may see a couple of red candles in the Nasdaq. But look, how is this right here any different than what happened here? What happened here? I know the candles look larger, okay, but again, don't get ahead of yourself. The Nasdaq, you'll know when it sells off, when it drops, 400 or 500 handles inside of one day. All right, want to see something really wild? Look at stuff like Amazon. Amazon, I think we'd all agree, is pretty mellow overall. When I say it's mellow, I mean Amazon, barring any earnings announcement, Amazon's sitting with like a 31% implied volatility. Most of the expirations. But I want you to open up like the June 30th expiration inside of Amazon and do yourself a favor. For those of you that speak Option Geek, do you speak Option Geek? I want you to look at implied vol, right? Okay, implied vol. Why should you look at implied vol? How many times have you seen that, right? In a very significant market capitalization. Now we talk about inverted implied volatility skews. And we've talked about it in stuff like Nvidia. And we've talked about it in stuff like what? Okay, like Tesla. Can you believe it's in Amazon right now? This is 7 days out. The skew is inverted. That means there's enough call buyers in here, call buyers, okay, that you're actually flipping the skew over and the risk becomes to the upside. Now, I'm not telling you this is a sign, okay, but it's a sign. It's a sign, okay, of a marketplace that has so much demand for calls. You realize that this has not abated. Now, it could be a sign. You guys can call it a sign for like a top in the marketplace. Call it anything you want. I don't really care. Okay. It's a sign of an overzealous marketplace. There's no question about that. But the reality of an inverted implied volatility skew is it exists because there's incredible demand for calls. And if you have demand for calls, in effect, what you're basically doing is going to be driving stock up. Look at the demand for calls in here. Almost 1 million calls have traded in Amazon today. And again, only about 400,000 puts. Now, it's not completely like wild in terms of the call sizzle and put sizzle. Sizzle index is today's option volume versus the previous 5-day option volume, but it's notable. And the reason I'm bringing up Amazon has not been in play. Amazon, yes, it's been rallying. It's a freight train to the upside, but it hasn't been like spurting to the upside. Like everybody's focused on Nvidia because it's up, 200%. And you would expect stuff like inverted implied volatility skews, which is absolutely true inside of Nvidia, but you wouldn't expect it in an Amazon, okay? Would you expect it in something like a Microsoft? And Microsoft's backed off a couple of bucks, okay? Would you expect it in Microsoft? Because look, Microsoft is a 22% IV. And as you go further out of the money, the IV actually lifts a little bit, okay? And that, people, that's chaos and trade right there, all right? That's one of the reasons I'm telling you right now. Whatever we're involved in here, it's like a fever pitch. I mean, volatility in the S&Ps dropped to 13%. Vol skews are inverting in tech stocks. They haven't done this, okay, since, back in like the internet bubble times. That's not necessarily to draw a conclusion that we're going to crash and burn, okay, but it is to draw a conclusion of you can feel, right now in the markets, kind of the angst out there. And it is a trade that eventually will flip over. And this is something that, again, we're waiting. Inverted skews, okay, but tech hasn't really sold off. The overall implied volatility is low. Skew of the overall marketplace has dropped, okay? What I am trying to portray here is some very, very dangerous signs in this marketplace, okay? You can't get caught looking for a particular move. Now, granted, I'm short, okay? We could continue to squeeze considerably further. And if I'm short, and overall in here, I'm short about 3,000 deltas, but it's 3,000 SPY beta weighted deltas. If I weren't comfortable with that risk, I wouldn't have it on, because I'm going to tell you right now, right? I can't see past almost like minute to minute, hour to hour. And I was talking about that on the Wednesday night video, that we're trading right now with, if you will, with like no memory. We're like a fly. Every second, every 7 seconds is like the slate is wiped clean. And to further that, I mean, that's what an inverted implied volatility skew means. It's just, in effect, there is risk to the upside. So, I mean, you can feel it in this marketplace. I say there's angst, but you can feel it, you can taste it, you can touch it, you can see it. It's in the inverted implied volatility skew. Dangerous right now. Now, shifting gears completely here. Commodities. Let's first talk about oil for a brief moment. Oil's rallied back up. Oil, though, is sitting, pardon the pun, the bottom of the barrel. But you're starting to see, okay, commodities, for instance, like corn, wild sell side activity. We're starting to see things like bonds. Bonds, this almost looks like it's ready to break back to the upside. This is just something that you want to keep an eye on in the days to come. Because, I'm talking about from this rip your face off rally that we've had. All of a sudden now we're talking about a recession. It's part of the news cycle. We're all hopped up on AI, and now everybody's looking for the recession. Okay, and it's again kind of that it's like a merry-go-round of horrors. And again, AI, we're saved. All of a sudden, the merry-go-round turns just a little bit more, and we're talking about a recession. You're like, how can that even be? Watch some of the commodity products, because from where I view commodities, and especially when you start looking at like energy sector and so forth, apologize here, we come over to the energy sector, it looks, okay, very recessionary. To look at like the bond market, even though the Fed is continuing to discuss raising rates, the bond market is kind of tipping us off. Wait a second, this might not be per se what you think it is. We are in a very, very dangerous spot, though, in the marketplace. Inverted implied volatility skews. VIX is incredibly low. All of a sudden, like, the idea in commodities, recession comes back into scope. Like, how could that even be? But that's, relatively like odd, absolutely. But it's what's being thrown at you in this marketplace today. And again, we look at the S&Ps, and you can see us backing off over here, but there's no signs, if you will, of that broader sell side activity proliferating in this marketplace. As I was saying, a little bit of a position update. Okay, keep it short, keep it sweet. Got positions on, some shorter term positions like stuff in Netflix. In Netflix, I mean, look, I am right on the dance floor, in-out spread. I'm actually, for the first time, I'm up. Okay, for the most part, I'm massively unchanged, but the Netflix spread is right back to where we want it. Look, we stood in the front of a freight train. Netflix is like one of the only stocks that, maybe it's actually peaked and pulling back. It's too early to tell. It really is. It's too early to tell. Other positions in here, just a 50, 60 point S&P sell-off took our inventory from, some of our inventory was down pretty dramatically. Okay, there's nothing in here that's of concern at this point. I mean, what a difference 4 trading days has made. Okay, I'm back, Mortimer, because it's again, it's pulled back enough such that none of the positions we were taking heat on are we even relatively concerned about. Now, granted, as I said, tech comes to life again next week, but we may have to worry about those positions again. But I cannot stress enough, there is nothing here in the Nasdaq trading minute to minute. We could open incredibly strong on Monday. You'll notice, on this weekend's update, I'm usually making pretty strong. I typically come in here and make fairly strong forward-looking statements. There is no forward-looking right now. In fact, one of the craziest things, and I'll kind of wrap up with this, is in the SPX. So the SPX, okay, this week that we just passed through, and again, I want to reiterate that this week was a 4-day trading week. Okay, there's 1, there's 2, there's 3, there's 4, and we've just been riding on the lower edge of that expected move. But again, the whole week was basically $50, plus or minus $50 is the move we were looking for. Okay, now next week is a full 5-day trading week. What do we have in store for next week? Let's come over here to the 7-day expiration. Why 7 days out? First of all, they're quarterlies, but it's the end of the week. That's right there. That's the Friday expiration. What do we have? Well, this is kind of crazy. It's about a $52 expected move, and the expected move is not settled. We still have about 15 minutes left in the trading day. So the interesting and ironic thing is you see this week, you kind of think, oh, maybe a little volatility hit this marketplace. Maybe it did, but the expected move has not moved really at all. And we have 5 trading days, which ultimately what I'm telling you, implied volatility has dropped. Look, for those of you that are involved, if you're selling any short dated options, you seriously have to think again, okay? At the money volatility in the SPX for next week is under 10%. People, we haven't seen that in a very, very long time, right? At the money implied volatility is under 10%. You do realize that we have to actually go back years to see implied volatility drop like that, okay? Years, obviously not 10 years in here, but if you will, we can even cruise over and take a quick glance at VIX, okay? We basically have not seen this since pre-COVID times where the at the money implied volatility was that low. Look, if there's a sign of a market unwind, okay, maybe it's just a hint of some negative gamma squeezes inside of major tech stocks. If there's a sign of a market unwind, maybe, just maybe, some of the commodity products are worth looking at as they sign, okay, of like recession might be being priced into some of those commodity products in just the last couple of days. But it's all about tech, okay? And if tech actually opens strong on a day-to-day basis, okay, that's it. Markets could, in fact, continue to squeeze higher. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.